good afternoon. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. To my left is my colleague Suyash Maheshwari.
Hi, Shweta.
Hi, Suyash. It's a Friday close for the markets. Markets, in fact, ending in red.
Yes, Shweta. So after a flattish opening, Indian markets, turned highly volatile, and Nifty was trading in a range of about 130 points throughout the session. Now, in the tussle between bulls and bears emerged victorious today, and they managed to drag the index lower in the afternoon trade, even pulling it below the crucial support of 19,700 levels. Now, as a result, the market has extended its losing streak to 3 straight sessions. Now, at close, Nifty 50 was down about 0.34% below the support of 19,700. It ended at 19,674 mark, whereas Sensex was down about 0.33% in today's trade, and it closed just above the 66,000 mark. Now, Nifty mid cap and the small cap indices outperformed the market, although they were mixed in today's trade. Nifty mid cap 100 was down about 0.11%, and it closed above the 40,100 level, whereas the small cap 100 index outperformed the markets, and it was up about 0.26% in today's trade and closed at 12,476 levels. The volatility came down slightly. It was down about 1.45%, and the index India VIX sits below the 12 mark at 10.66 levels.
All right, so some sort of consolidation there, not in line with what we were expecting perhaps, but it's happening gradually. Ambareesh Baliga, independent markets expert, joining us very shortly. But before he does that, I want to quickly also begin by understanding Nifty, maintaining that crucial support of 19,500, that resistance level hasn't crossed that just as yet. We see that happening. Do you think it's going to happen sometimes next week? That's the anticipation?
That's a big question, Shweta. Now, as we have seen throughout the week, the markets have been trending lower and lower. The first support for Nifty was looked at 20,000 levels. Nifty broke that. It fell about 19,800 or so in the Monday's trade. The next support came in at 19,800. We broke that again. Then we were looking at 19,700, and now 19,500 seems to be the support emerging, at least from the options data that's available to us. On the upside, Nifty first will have to break down the previous support of 19,700 to see a rally up to 19,900 levels, or perhaps 20,000 mark, and from there on 20,200, which is the record high levels for the index, will play as a crucial resistance levels going forward.
All right, so a sea of red once again in the markets. Ambareesh Baliga joining us at this point. Mr. Baliga, thanks very much, sir, for taking time out. Much needed consolidation phase that we keep discussing here. It looks like it's coming through, but it's slightly unabating right now. It's happening, but it's happening at a very slow pace, with both Sensex and Nifty down today, but not perhaps as much as many would have anticipated.
Yeah, but then the way things are, it looks that the trend could be downwards, and like you were discussing some time back about the support levels, I think the next important support level is about 19,500, 19,600 levels, which we are very close to that. And if that is broken, then I think you could see a decently deep cut. And when I say a deep cut, I'm talking of at least about 500 to 800 points from there. So I think we need to watch that very closely. And if we don't break that, yes, I think we can consolidate in this range of 19,500 to 20,000, and then possibly post that move up. But then as of now, that sentiment which was there at the 20,000 levels, I think that's decently broken as of now.
Okay. And, for people who are watching this and a consolidation phase that has just begun, should they enter markets? Is this the right time to enter market, or should people wait and watch? Investors, retail investors particularly, wait and watch?
No, if you're an investor, then I would suggest that you should wait and watch for a while, because we are still sort of a no man's land right now. And for traders, yes, those who are looking at some sort of a bounce back can buy at the current levels with a very clear, strict stop loss. But I suppose investors may really get a very good chance in case we break this 19,500 levels. In that steep fall, I think people should utilize that opportunity and not really wait for much longer.
Now, Mr. Baliga, last week we were seeing markets, making new highs almost on a daily basis, whereas some analysts were even expecting that the current run could take Nifty to as much as 21,000 levels. What changed this week? What's the overhang for the market?
I think what changed possibly is the fear of what Fed would say. I think that's when we saw the markets starting to come down, and with a sort of a hawkish stand which we have seen from Fed, and possibly there'll be an increase. Luckily they maintained status quo as was expected by the markets, but then there's a talk that possibly there could be an increase before the year end. I think that's what has taken the wind of the markets. At the same time, we have seen that oil, continues to be a concern, although we have seen some correction, but then most of the analysts are really expecting it to go more towards $100 than really come down. So I think these are these are two major concerns for the time being. And then in the next 15 or 20 days, we'll again start seeing the earnings coming in, and the expectations are decently high because between the last earnings and now, the markets have gone up. So along with that, the expectations from the earnings also have moved up. So meeting that could be a bit difficult. Looking at the way things are. And last but not the least, we should remember that as we are getting closer to the general elections, which is in May next year, could be a bit earlier. But then, like normally by say November, December, the preparation starts. And whenever you have general elections, whatever the markets have been expecting, we should still remember that there is that bit of uncertainty whenever there's an election. So I think that is what will also play out in the markets going ahead. So we could see a lot of volatility.
Okay. Now, you said you see a deep red. Is that your long-term outlook or a short-term outlook? Because there's going to be a lot happening, as you said. Elections around the corner, festive season starts now. What's your long-term outlook?
See, in the longer term, you really cannot be negative on India. I think this will be one of those bright spots. But then we could see that huge amount of volatility in between. And in that volatility, we could see a cut, which could be as high as possibly, like I said, 500 to 800 points, could be about 1,500 points also. Don't be surprised if you see, levels of closer to about 18,200, 18,500. But then that should be utilized by long-term investors to get in. Because if you're talking of the next 5 years, next 7 years, I don't think that there is any way, you can go wrong with it, go wrong on the India story. Even if we assume that there's a change of government, what we have seen in the past so many decades, that whichever the government is, like the Indian economy has continued to perform.
Okay. Mr. Baliga, before we go to sectors specifically, as far as domestic cues is concerned, anything that stands out for you that could spring a surprise in the recent months to come? Because right now, the fact that Indian markets have snapped their all-time highs is mostly on the back of global cues, the US Fed rate pause and the crude prices. Anything domestically that could spring a surprise?
No, like I said, possibly the earnings could spring a surprise in terms of negativity. Because again, like if you look at Q1, most of the earnings were decent, some were better than expected. But then the way, people have raised the bar for Q2 and the expectations are still higher, I think meeting those could be a bit difficult across the sector. So, and especially, if you're looking at the export performance, that's been a bit poor as far as India is concerned, because we have seen that the global economy, overall hasn't been doing too well. So I think there could be some negative surprises in the earnings. So that's something where one should be a bit, have caution about.
Okay.
So I think that could be one of those triggers for a further correction.
All right, so let's also move to sectors that we are tracking today.
Certainly, Shweta. So now among the sectors, Nifty PSU Bank continued on its dream run and the index was up about 3.51% in today's trade. Now the rally continues to run unabated, but we are not seeing any sort of a rally in PSU Banks having an impact on the overall Nifty banking pack. Now the Nifty banking pack ended with moderate losses in today's session. The index attempted to, after a 3.5% decline in the last 3 days, it attempted to have some sort of a catch-up rally, and the index was up about 0.5% in the morning and the afternoon trade. But then we saw bears taking over in the afternoon trade, and Nifty Bank also consequently ended lower at a slightly negative bias, down about 0.03%. Now the auto pack was another index which outperformed the market. The auto pack was up about 0.21%. Now among the losers, Shweta, Nifty Pharma was the biggest drag on the market today. The index was down about 1.55% in today's trade. The metal pack and the media pack were also among the laggards today. Both indices were down about 0.66% in today's trade.
All right, and while you're at it, Suyash, let's also quickly take a look at some of the stocks we are tracking this afternoon.
Certainly, Shweta. So among the top gainers was IndusInd Bank. Now IndusInd Bank rallied on the back of a brokerage call from UBS, which maintained a buy rating on the stock with a target price of about 1800, and UBS said that the company is on track to improve its earning quality. Maruti Suzuki was another stock which was among the top gainers today. The stock rallied about 2.61% in today's trade. Now this was on the back of positive commentary from Morgan Stanley. Morgan Stanley has reiterated its overweight rating on the stock and has shared a target price of about 11,963. Citi also reiterated its bullish stance on the stock. It has a buy rating on Maruti Suzuki with a target price of about 13,600. Among other gainers in today's trade were SBI, which was up about 1.79%, Mahindra & Mahindra, which rallied 1.69%, and Asian Paints, which saw a rebound from last week, and it was up about 1.12%. Now among losers, Shweta, the top loser in today's trade was Wipro. Wipro was down about 2.44% and was it was on the back of the resignation of CFO Jatin Dalal, who had served about 21 years with the company. And among other losers today were Dr. Reddy's, which was down about 2.32%, UPL, which fell about 1.83%, Cipla, which ended 1.66% lower, and Bajaj Auto will fell about 1.58%.
All right, those of course are top gainers and losers. But going back to sectors, Mr. Baliga, what are you making of the PSU Banks story? It was up over 3% this morning, and in fact me and Suyash, we have been discussing the PSU Banks story unfold since morning, in fact, Suyash.
Yes, certainly, Shweta, and it ended about 3.5%, 51% higher. And it's the smaller banks that are leading the chart. Although SBI did, bounce back today, and it ended among the top gainers among the Nifty stocks.
Mr. Baliga?
This was one sector which I think people had written off about 4 years back, with a lot of NPAs, balance sheets mostly in a bad shape. And then we saw a rediscovery of the PSU banking space, and we saw some of them actually becoming multi-baggers because the balance sheets became clean, NPAs were reduced. We could actually see the profitability at record high for all the PSU banks in the last couple of quarters. But now with this move which we have seen in the last 2-3 days, I think it's getting a bit too stretched, because clearly, if you're talking about the banking sector overall, I think NIMs have actually topped out in Q1, and I don't see that expanding even for the PSU banks going ahead. And I think whatever numbers we have seen in the past 2-3 quarters, I think will remain the best. I don't see those numbers really being surpassed, at least if you're talking of the next 1 or 2 quarters, or maybe 3 quarters more. So at this point of time, I think this move is slightly overstretched and should be utilized to book out. I surely will not suggest anyone to buy fresh into PSU banks at this point of time.
Mr. Baliga, in the recent run-up in the PSU banks, some of the more prominent names have not outperformed, and at least when we look at the valuations, they are trading at a discount to the mid-cap banks. Some of the banks like SBI, Bank of Baroda, their price-to-book multiples are currently below 1. So, do you see some sort of buying opportunity there?
No, not really, because they have been quoting at those valuations for a reason, and there is no way we can compare the PSU banks with the private sector banks, whether it's the large caps or even the mid caps, because they are much more fleet-footed as compared to the PSU banks. I mean, the way it has moved, I think, I mean, at this point of time, I mean, that momentum can in fact take them a bit higher. But from an investment perspective, I would possibly stay out.
Now, I also just wanted to get your view on the private banking pack. Now, they have been under pressure. We have seen a divergence in the performance between the PSU bank and the private sector bank. Now, what's the big overhang in the private banking space?
Because the private banking space had outperformed extremely well when the PSU banks were I mean, down in the dumps. But then when you saw the performance of the PSU banks improving, I mean, like a few of them had become more aggressive. Clearly, they were eating into that space which private sector banks were sitting quite comfortably. And at the same time, the sort of performance which we have seen in private sector banks in the last, say, about 5 to 7 years, I think that would be a bit difficult for them to, I mean, again, like re-show in the next couple of quarters because it's I mean, sort of competition which is coming in. And if you're talking of the largest among them, HDFC Bank, I mean, at the recent investor meet, I mean, they were very clear about how the NIMs will start coming down, which again I talked about some time back. And there was also a bit of a question mark on, I mean, the asset quality, which I think has spooked off investors from HDFC Bank, and because of which we have seen that decent correction, which again had an effect on the Nifty and Sensex overall. But then here also, I mean, I don't see too much of a downside, but a downside of about 1400 to 1425 is very much possible for a bank like HDFC Bank.
So pressure, do you expect the pressure to continue on the HDFC Bank? Because in the last 3 or 4 days, I think I was reading a report, HDFC Bank alone has wiped out about 1 lakh crore of market cap. So do you see the
Absolutely.
pressure in the HDFC Bank stock continuing?
I think it can continue for a while longer. Like I said, possibly 1400, 1425. But then that could be a good level to, I mean, enter HDFC Bank because even when you're seeing the downgrades from, I mean, quite a few of these large brokerage houses, I don't think anyone has really given a price target of below 1800 to 1850. I mean, the targets were 2000 plus and they reduced it to 1800, 1850. So I mean, for a bank or a stock as big as HDFC Bank, I mean, if you are, I mean, if you're able to enter at 1425 and exit at about 1800, 1850 in about a year's time, I think that's an excellent return for a stock like that.
So perhaps not a trader stock for a long-term investor, HDFC Bank still look attractive?
Absolutely, absolutely.
All
Because
right.
I mean, it's giving you that safe return with not much
Okay.
of a downside.
All right. HDFC still remains a safe bet. That's the word coming in from Mr. Baliga.